Okay, so what really makes a quarter, truly stand out in tech? And how is one company really showing, not just telling, about AI's impact, like everywhere in their business?
Yeah, it's a great question. It cuts right to, well, what does real AI integration actually look like, beyond the buzzwords? We're starting to see real transformation.
Exactly. So in this deep dive, we're going to unpack Alphabet's second quarter 2025 earnings. Our mission really is to look at those pretty impressive financial numbers, see how AI is actually fueling innovation search, cloud, YouTube, the works, and then get into the big investments and the legal challenges they're facing.
Right. And for our insights today, we're pulling directly from the Alphabet second quarter 2025 earnings call, their Q2 10Q filing, and the official press release. So straight from the source.
Gives us a pretty complete picture. Let's jump in then, because CEO Sundar Pichai himself called Q2 a standout quarter. And the numbers, well, they seem to back that up immediately.
They really do. Consolidated revenue soared to $96.4 billion. That's a robust 14% jump year over year.
14%, wow.
Yeah. And even if you look at constant currency, which kind of smooths out exchange rate effects, it's still a solid 13% growth. So the underlying business is strong. Operating income also climbed 14%, hitting $31.3 billion. And they maintained a healthy operating margin, 32.4%.
And the bottom line, net income.
Even better there. Net income jumped 19% to $28.2 billion. Diluted EPS, earnings per share, that was up 22% to $2.31.
Okay, but what I found really striking was the breadth of the growth. You saw double-digit revenue growth basically everywhere, right? Search, YouTube ads, subscriptions, devices, cloud.
Exactly. That's the key takeaway. It wasn't just one area pulling the weight. It was, like you said, broad-based strength. And the core message coming from leadership, AI isn't just a side project. They literally said it's positively impacting every part of the business, driving strong momentum.
Right. It feels like it's the engine underneath everything now.
Pretty much.
Yeah.
It's not just about launching shiny new AI toys. It's about how AI fundamentally improves what they already do.
So they talk about this differentiated full-stack approach to AI. What does that actually mean in practice? Is it just having lots of different AI bits, or is there something more integrated?
It's definitely about integration, the synergy. Think of it in layers. First, you've got the AI infrastructure. They have this leading global network of AI-optimized data centers, cloud regions. They offer the widest range of TPUs. Those are their custom AI chips alongside GPUs.
And that infrastructure piece is really key, isn't it? You mentioned Gen AI unicorn.
Yeah, that's a huge point. Nearly all Gen AI unicorns use Google Cloud. And a growing number, including top research labs like SAFE, Superintelligence, and Physical Intelligence, are specifically choosing their TPUs. It's a major differentiator.
Okay, so that's the foundation. What sits on top of that?
That's where their AI research and models come in. They're expanding the Gemini 2.5 family, highlighting industry-leading performance. They even debuted an extremely fast flashlight version, which sounds intriguing. And get this, they achieved gold medal-level performance in the International Math Olympiad using an advanced Gemini version.
Wow, okay. That's impressive. And developers are using it.
Massively. 9 million developers have now built with Gemini. That shows real traction.
So you have the infrastructure, the powerful models. How does this actually reach, us, regular users or businesses?
Through their AI products and platforms. Think Workspace, Chrome, Search itself. And the usage numbers here are just, well, staggering. They're now processing over 980 trillion monthly tokens across their surfaces.
980 trillion. Tokens being like pieces of data the AI processes?
Exactly. Words, pixels, that kind of thing. And that number doubled from 480 trillion just back in May. It's explosive growth in actual AI interaction.
That really paints a picture. And the specific product numbers?
Also huge.
Yeah.
The Gemini app. Over 450 million monthly active users now. Daily requests grew over 50% just from Q1.
Okay.
And remember VO3, their video generation model. Over 70 million videos generated with it since May.
70 million. Wild.
Right. And think about work in June alone. Over 50 million people used AI-powered meeting notes in Google Meet.
50 million. That's a massive productivity feature adoption right there. What does that scale mean for businesses using Workspace?
Huge potential efficiency gains. And they keep adding things. Google Vets, a new short video tool in Workspace using VO3, already hit nearly 1 million monthly active users.
Plus, new Android and AI features on Samsung's latest phones and the paid Google AI Pro and Ultra plans boosting subscriptions. AI is definitely moving mainstream.
No question about it.
Okay, we've seen the big picture of AI's influence. Let's zoom in a bit. How is this actually changing their core businesses? Starting with, well, the heart of it all, Google's search. They called it an incredibly exciting moment for search, with AI powering an expansion in how people find information.
That's the key phrase, expansion. Overall queries, commercial queries, they're still growing year over year. But the new AI experiences, they're adding significant volume. And interestingly, AI features are actually causing people, especially younger users, to search more. It's changing behavior.
Searching more, not just differently. Okay,
That's
so AI overviews are a big piece of this.
a huge piece. Now driving over 10% more queries globally for the kinds of searches where they appear.
Yeah.
And that's accelerating. They're powered by Gemini 2.5, delivering what Google calls the fastest AI responses in the industry. You get that synthesized info right there.
Makes sense. And what about searching with, like, images or your phone screen? Multimodal.
Yeah, strong growth there too. Yeah. Especially combining Google Lens using your camera and Circle to circling stuff on your screen with AI overviews.
Yeah.
Younger users are really leaning into this.
It feels more intuitive, maybe.
Could be. Plus, AI mode, their sort of end-to-end AI search experience, already has over 100 million monthly active users in the US and India. People seem to like it for longer, more complex questions.
And they're planning more for AI mode.
Yep. Enhancements like deep search and more personalized responses are on the roadmap. They're definitely pushing forward there.
And visual search itself, just using Lens.
It's exploding. Up
Yeah.
70% year over year. It's one of the fastest growing query types. And importantly, most of it seems to be new searches, not just replacing text searches. Plus, good growth for shopping queries using Lens, too.
Speaking of shopping, that virtual try-on feature sounds interesting.
Yeah, it's in Search Labs for US users. Lets you virtually try on billions of clothing items. Early results, extremely positive, especially with Gen Z engagement. It's a glimpse into more immersive online shopping.
Okay, let's pivot to Google Cloud. Clearly emerging as an enterprise AI powerhouse. Very strong results, they said.
Very strong is almost an understatement.
Yeah.
The adoption scale is remarkable.
Give us some highlights.
Okay, get this. The number of deals worth over $250 million doubled year over year.
Doubled.
And in just the first half of this year, 2025, they signed as many deals over $1 million as they did in all of 2024.
Wow, that's serious acceleration.
It really is.
Yeah.
New GCP customers jumped nearly 28% quarter over quarter. They now have over 85,000 enterprise customers. That signals real trust.
And big names are signing up using Gemini.
Big names. LVMH, Salesforce, Singapore's DBS Bank, all building with Gemini. And that usage. Gemini usage specifically is up 35 times year over year among these clients.
35x. That's huge buy-in. What's enabling this on the tech side?
It comes back to that infrastructure we talked about. Industry-leading performance and cost efficiency for AI training and inference that's actually running the models. Plus, specific innovations like anywhere cache for storage, which they say improves inference latency, the AI response time by up to 70%.
70% faster responses. That's critical for real-time stuff.
Absolutely. And rapid storage, delivering 5 times better latency than other major cloud providers. These technical edges matter a lot for demanding AI workloads.
So, okay, beyond the infrastructure, how are businesses actually using these AI agents? Can you give some real-world examples?
Sure. Think about Wayfair. They're using databases integrated with AI to streamline their data pipelines, aiming for more personalized customer experiences. Or Vettel using Gemini-powered data agents with BigQuery to analyze product feedback much faster.
Okay, so customer experience, product insights. What about operations or security?
Target's using Gemini-powered agents for threat intelligence and security operations, basically, boosting their cybersecurity.
And software development. That seems like a prime area for AI.
Definitely. Capgemini is using AI software engineering agents to deliver higher quality software faster, automating things like code generation, testing,
Makes sense.
and even internal stuff. BBVA, the bank, found Gemini and Workspace are saving employees nearly 3 hours a week by automating repetitive tasks. They're now rolling it out to 100,000 employees globally.
3 hours a week per employee. Scaled up. That's enormous.
Huge efficiency gain. And Google's not just selling the tools, they're building an ecosystem. They released an open source agent development kit, over 1 million downloads already.
1 million in just 4 months.
Yeah. And AgentSpace, their enterprise chat and agent platform, booked over 1 million subscriptions before it even hit general availability. There's clearly massive demand.
And the cloud financials reflect this.
Absolutely. Cloud revenues up 32% to $13.6 billion. Operating income shot up to $2.8 billion. And the operating margin expanded significantly from 11.3% last year to 20.7% now.
That's a very healthy jump in profitability for cloud.
It is. And the future looks busy. The cloud backlog, basically contracted future revenue, grew 18% just from Q1 and 38% year over year. It's now at $106 billion.
$106 billion backlog.
Yeah. Though they do caution they expect to remain in a tight demand-supply environment into 2026. Demand is just surging.
Okay, let's shift gears to YouTube. Still dominating streaming, it seems.
Dominating is the word. According to Nielsen, YouTube led U.S. streaming watch time for over 2 years straight now. Hit a record high in June, 12.8% of all TV viewing time.
On the actual television set, not just phones.
Increasingly on the TV, that's a key trend. The generation that grew up with YouTube, they're watching on the big screen now. Millions of sports fans, too, watching over 40 million hours of sports annually on YouTube.
And they're doubling down on sports, right, with the NFL?
Yep. In September, they'll stream the NFL's first ever Friday game live from Brazil. That's a big play for live sports viewership.
Meanwhile, YouTube Shorts just keeps growing.
Phenomenally.
Yeah.
Averaging over 200 million daily views now. And critically for creators, in the U.S., Shorts are now earning as much revenue per watch hour as traditional videos. In some countries, even more.
That's a huge milestone for monetizing short form.
It really is. And AI is helping here too, improving recommendations, auto-dubbing content to reach wider audiences. It helps creators and brands get better returns. They started rolling out new AI tools specifically for Shorts creators too.
And on the advertising side, how's that looking?
Ad revenue grew 13%. Driven mainly by direct response ads than brand advertising. They're seeing more volume and higher prices for Shorts ads. This is helped by native ad formats, AI tools that resize ad creatives automatically, better targeting. They mentioned McDonald's USA getting 3.3 times the industry benchmark view-through rate using Shorts partnership ads.
So the ads are effective. What about subscriptions?
Still diversifying there. They expanded Premium Light to 15 more countries. And connecting back to the TV screen, CTV shopping ads drove over 1 billion conversions in the last year. People seeing an ad on YouTube, on their TV, scanning a QR code, and buying.
1 billion conversions from TV ads. That's direct response on a massive scale. Okay, last one in this segment. Other bets, specifically Waymo.
Right, the autonomous driving unit. Waymo keeps scaling up. They launched in Atlanta, more than doubled their service area in Austin, and expanded significantly in LA and the Bay Area. Real, tangible growth on the ground.
Are they reaching new kinds of riders?
Yeah, they launched teen accounts, starting with 14 to 17-year-olds in Phoenix.
That's interesting.
And the Waymo driver itself. It's now driven over 100 million autonomous miles on public roads. The team's testing it over 10 cities this year, like New York and Philly, hoping to eventually offer rides in all of them.
100 million miles. That's a lot of data, a lot of learning. Okay, so we've seen the growth, the AI integration, but all this costs money. How are they funding it? And what about those legal headwinds?
All right, let's talk about the financial engine in that complex legal landscape. Operating expenses were up 20% overall, hitting $26.1 billion. What drove that increase? Mainly expenses for legal matters, employee compensation, and depreciation.
That legal cost seems significant. There was a specific charge mentioned.
Yeah, general and administrative expenses included a $1.4 billion charge. That was related to settling some legal matters in principle.
$1.4 billion just for settlements. Okay. What about R&D?
R&D investment grew 16%, mostly higher compensation and, again, depreciation. Shows the commitment to innovation is still very strong. Sales and marketing was up 5%, mainly from increased advertising.
And depreciation itself, that wear and tear cost on all their servers and data centers.
That jumped significantly, up $1.3 billion year over year to $5 billion. That's a 35% growth rate. And they expect it to accelerate further in Q3.
Which connects directly to their spending on new infrastructure, their CapEx.
Exactly. They updated their full year 2025 CapEx outlook. It's now around $85 billion.
85. Up from 75.
Up from $75 billion. It reflects more server investments, timing of deliveries, and faster data center construction, mostly driven by that huge cloud demand we talked about.
And they expect CapEx to rise again in 2026.
That's the expectation.
Yeah.
They are investing aggressively in future capacity. This isn't just maintenance, it's a massive build-out.
And they're hiring too.
Yep, expect headcount growth this year in key areas. Q3 will see a bump from new graduate hires. Plus, Q3 expenses will reflect the upcoming Pixel product launch in August.
Okay, turning to cash and how they manage it, still have a lot on hand.
Oh yeah. Ended the quarter with $95.1 billion in cash and marketable securities. Plenty of flexibility.
Free cash flow looked a bit lower in Q2, though.
It was $5.3 billion. But that was impacted by that big jump in CapEx and also cash tax payments for both Q1 and Q2 hitting in the same quarter. If you look at the trailing 12 months, Free cash flow was still a very healthy $66.7 billion. So the underlying cash generation is strong.
And returning cash to shareholders.
Definitely. They bought back $13.6 billion in stock and paid out $2.5 billion in dividends just in Q2. They still have authorization for another $86.3 billion in buybacks.
And they increased the dividend too, right?
Yep, bumped the quarterly dividend by 5% to $1.21 per share. Sign of confidence. They also issued $12.5 billion in bonds back in May for general corporate purposes.
Anything else on the financial housekeeping front? Taxes?
One interesting note. The One Big Beautiful Bill Act, or OBBA, was signed into law July 4th. It changes U.S. federal tax law. Alphabet's still figuring out the exact impact, but expects to start reflecting it in Q3.
Okay. Now for the really complex part, the legal and regulatory environment. It feels like they're fighting battles everywhere.
That's a fair assessment. They acknowledge numerous ongoing inquiries, investigations, litigation globally. It's across antitrust, privacy, patents. Let's try to break down the big antitrust ones.
Okay, where do we start? Europe.
Sure, Europe. For the shopping case, that $2.4 billion fine was paid last year. For Android, the court mostly upheld the EVC decision, though it cut the fine slightly to $4.1 billion. Alphabet is appealing that higher up. Separately, Japan's Fair Trade Commission issued an order on Android agreements back in April. No fine, but requires changes. Google says they're engaging constructively there.
What about AdSense for search? I remember a big fine there too.
There was $1.5 billion. But the General Court actually overturned that fine last September. However, the European Commission has appealed that decision. So still ongoing.
Okay, shifting to the U.S., the big search trial with the DOJ.
Right. The district court ruled back in August 2024 that Google violated antitrust laws. Then came the remedies phase, deciding what Google has to do about it. That concluded in May this year.
And we're waiting for the judge's decision on remedies.
Expected in August 2025. The DOJ proposed structural remedies, things that could mean potentially breaking up parts of the company, which Alphabet says could have a material adverse effect on their business. That means a significant negative impact.
So high stakes. And Google plans to appeal.
They plan to appeal the original violation ruling and potentially the remedies decision too, depending on what it is.
Okay, what about ad tech? That's another major DOJ case, right?
Yes, and other regulators are looking at it too. The U.S. court gave a mixed ruling in April. It said the DOJ didn't prove anti-competitive behavior with Google's advertiser tools or acquisitions. But it did find that Google's publisher tools violated antitrust law by excluding rivals.
So a partial win for Google, partial loss.
Kind of. Now there's a separate remedies proceeding for the part they lost, scheduled for September. Again, the DOJ is proposing structural remedies with potential material adverse effect.
And Google will appeal the part they lost.
That's the plan. And remember, the EC and UK regulators are also investigating their ad tech. It's a global issue for them.
Then there's Google Play, the App Store.
Right. They reached a settlement in principle with a coalition of U.S. states back in 2023. The money for that was put into escrow in May this year. But separately, in the Epic Games case, a jury found Google violated antitrust laws regarding Google Play's business practices last December. Epic wasn't seeking money, but changes.
And the judge ordered changes.
Yes, a variety of alterations to their business model. Google is appealing that, and the changes are on hold for now.
And finally, the European Digital Markets Act, the DMA, that's new regulation.
Very new and very significant. The EIC opened investigations into Google's compliance back in March 2024 and issued preliminary findings of non-compliance in March 2025, another major regulatory front.
It's a lot. What's Alphabet's overall stance?
They maintain they have strong arguments, will defend themselves vigorously, and are cooperating with regulators. But they also state that for these specific big cases, they can't estimate a possible loss amount because of the uncertainties involved. You really have to see this whole landscape, all these cases, as interconnected. Their sheer scale and success, especially in search and mobile, makes them a constant focus for regulators worldwide.
And the outcomes could reshape the whole industry.
Absolutely. These aren't just fines. They could force fundamental changes to how Google operates, setting precedents that impact competition, innovation, and user choice across the entire tech sector for years to come.
And it's not just antitrust, right? There's privacy.
Right. Ongoing investigations and lawsuits in the U.S. and EU about location data, biometrics, user choices, ad practices. They did reach that $1.4 billion agreement in principle in April to settle some privacy matters.
Patents, too.
Always a risk. Potential for big damages, costly licensing deals, or even orders blocking certain products. They specifically mentioned the U.S. International Trade Commission, the ITC, becoming more important. Losing there could mean import bans.
And then just a general bucket of other potential claims.
Yeah, they list things like competition claims beyond the big ones, IP, data security, tax, labor issues, commercial disputes, issues around user-generated content, and even AI training data. It's a comprehensive legal gauntlet is a good way to put it.
So let's recap this deep dive into Alphabet's Q2 2025. What really stands out is, well, a company firing on all cylinders, wouldn't you say? AI is deeply integrated, driving real financial results.
Definitely. But beneath those impressive numbers, you see this huge commitment to future investment, pouring billions into AI infrastructure, and at the same time navigating this incredibly complex web of legal and regulatory challenges around the globe.
It really shows the scale they operate at, the pace of innovation they're chasing, and just the complexity of being a leader in the digital world today.
Well said.
So, the final thought for you, the listener. What does all this actually mean for you? As Alphabet keeps investing billions in AI, pushing these AI-powered services out globally, how might that change your daily digital life? You know, how you search, how you watch videos, maybe even how businesses you interact with operate.
And maybe just as importantly, how will the outcomes of these huge regulatory battles potentially reshape the whole tech landscape? Think about innovation, competition, the choices you have as a user.
Yeah, it feels like we're just scratching the surface of understanding where all this is headed. This is definitely an evolving story to watch.